Estate Profits. I'm your host, Ian Boshoff, and here with me is Jessica Couch. Jessica, good afternoon.
Good evening.
Good evening. Good afternoon and good evening. So thank you for joining with us. Our background here is in the real estate industry. I think both of ours started back in 1998. And
99. You beat me.
Just by one. I wasn't legitimate though. I was just cranking out phone calls on a Yellow Pages back then.
Oh, those were the good old days.
Yeah. But thank you for joining. If you haven't been a part of our show, welcome to our show. Our show is mainly about real estate and all things encompassing real estate.
Yeah.
And the name of the show is Real Estate Profits with Purpose. And I'll get into the purpose shortly, but what our services offer is we are a full-service mortgage and real estate brokerage, and we provide a streamlined white glove service approach with each and every one of our clients, ranging from first-time home buyers, existing homeowners, and real estate investors emerging into the house market. So this show is going to be giving you a bountiful amount of information that's going to help you as a real estate investor, that's going to help you as a homeowner, and what your next move is. And if you're a first-time home buyer especially, you want to be sure to listen to this show.
Yes, bountiful ideas for sure. We are a creative team. I really pride ourselves on being creative and finding the best possible outcome for that family. And that is going to vary from situation to situation, but really finding the creative way to make everything work.
Jessica's the queen of creativity when it comes to getting
we're a pretty good team. We are a pretty good team.
Well, Jessica, tell us about your background a little bit, when you started and what got you here. How many companies have you worked with?
Oh, gosh, a few. And I'm really glad that we're right here, because I feel like having the mortgage company and the real estate together is so much easier. It's so much easier for our borrowers. It's so much easier altogether, especially when you're a seller and you're selling one place and getting into another. Just having everyone in the same team and not having 10 different strings going is, that could be a nightmare. So much easier. And that's the reason I got into the industry. I bought my first house in 1999, got licensed after that. This was our experience. We had one company, and it was a mortgage and, loan and real estate company. And I loved the transparency. I loved working with one team, and I joined up and joined them. And, everything's changed throughout the years. We've been through a few housing crashes and some ups and downs and all arounds. And I love having our own company where we can do what we want and really give back more than a big box corporation ever allowed me to do. And that's what I'm really, really happy about.
That's a good point. And I think people feel, is there a conflict of interest when you're doing the loan and the real estate under one brokerage? And the answer is no. The main thing is actually it gives a better experience to the buyer,
absolutely,
and the borrower and the seller. It also provides a more of an opportunity for us to provide a discount to you, the client.
Absolutely.
And we just do this because it makes it easy.
It allows for full transparency. And I'll say real quick, I've worked with some other lenders, and when I'm on the real estate side and I say, hey, we need to go through all the numbers together so I understand all the client's options, they're like, what? I don't have to do that with you. Like, no, we're a team. That's what we do.
Yeah.
I love having that ability to make sure it's the best option for our client. When we're all in-house, there's no surprises because we have all the same paperwork together.
It's a confusing dynamic. Everyone loves talking about real estate. They love the house. Oh, you got to see this house. It's amazing. It's beautiful. But when it starts talking about finances,
right, and
the loan part, it's not an enjoyable process because the amount of paperwork you have to provide these days, the background that you have to give, it's a little invasive. And what we try to do is just explain why it's needed. It's not because we just don't believe you. It's because it's what these banks require.
Right. Well, those are underwriting guidelines here, and just having one contract in house. So we know if this person only has, $3,500 to work with, and we're using a down payment assistance program, I need the seller to cover all these other things.
Yeah.
And if we can't have that covered, we need a way to cover it in-house.
Yeah.
And without having one team on that, it's really hard to do.
Yeah, and we collaborate. We collaborate within our systems, and we can communicate between the real estate agent, the transaction coordinator, the processors, the underwriters.
We're all in a group
officer.
Message like all day.
Yeah. You should see my phone blow up. But that's just the benefit of working with a full-service brokerage. The reason why most don't have it is because it's a complicated process and it requires additional licensing, which we do have. And so again, we started back in 98. I'm licensed in both real estate and mortgage. Jessica's licensed in real estate, knows everything about mortgages, so she could do it if she wanted to, but she's too good at real estate
Oh,
to
no,
want
I
to do my
love
job.
this part. Yeah.
But yeah, so if you have any questions during the show, and if you have any comments during the show, feel free to text to 916-872-7177 or log on to promortgagerealty.com. So we're going to get into the description of what we're doing here. But first, the second part of our title is purpose, right?
Oh, yes.
Real estate profits with purpose. And Jessica, do you want to elaborate on what we do and what is our purpose and how we help?
Yeah, well, as a faith-based organization, we believe in giving back. I believe that is what we are here to do, and that is our purpose as business people. And I want to help promote other business people that are doing the same thing. So we are helping a couple of nonprofits right now with profits that come in from the show, a percentage of that, with both Sweet Dreams, which is really close to my heart, not just because of what I've been through in life, but I started helping this organization in 2014.
Yeah.
We do dream bedrooms for children battling life-threatening illness. If you need a tearjerker, jump on sweet-dreams.org and just being able to go into little girls' rooms or young men's rooms and redo bedrooms when these kids need to be able to come home to a safe place from the hospital is a amazing thing that we're able to jump on with community and be part of. I love that we're part of that.
And it gives the kids something to look forward to when they're
really
doing chemo
does,
and radiation.
yes. And the parents, we were in a room the other day and just, I really know this family, and the mom, they have spent the last 2 weeks at the hospital. She hasn't had a break, and to come home to this amazing room that they could just hang out and watch videos and a in-home concert. And the mom was over them. The daughter was also, but it was amazing. I'm really glad we get to be part of that.
What's their website again, Jessica?
Sweet-dreams.org.
Yeah, that's an amazing group. And then the other leg of the other nonprofit
Yes.
that we're going to be providing 10% of our profit to, it's either or, depending on whatever the client wants to push it to, is going to be the OUR Foundation. It's Operation Underground Railroad. And those of you who've seen the movie Sound of Freedom, it's against human trafficking, child sex trafficking, you name it, everything that everyone feels uncomfortable talking about, that's what they cover. They go in there, they fund private investigations and sting operations and go in and catch these people. If that's what you want to call them.
Yeah.
And really rescue these kids. So that's something that we want to do with a purpose. We want to make an impact on and be a pillar of the community. And we work with companies that also are interested in getting involved.
We do.
Yeah.
If you are a company and you'd like to be involved in this process, give us a call. You can text me direct at 916-532-8916. We have a lot of restaurants, gyms, salons coming on board.
Yeah.
It's a super easy program. You don't need to do a thing. We provide everything. I don't need $1. I don't need any of your energy. I don't need your staff, but we will promote you and help you grow.
Yep. It's an actual good thing to do.
Yeah.
So our topic today I want to get into is going to go touch on our economy, our interest rates, our rental markets, and some new loan products that you can use. Today's show is no doubt about the most new and experienced real estate investors, the issues that they face daily.
Yeah.
We're here to shed some light into this chapter and the ever-changing market. So we love to obsess about this wonderful thing called real estate. I know I personally stalk the internet every night looking at all these apps, right? Trulia, Zillow, Realtor.com, you name it. And I'm just going through them, right? And I'm always sending them to my partner and go, hey, how about this house? Hey, look at this house. And how about you? Do you do that at all or
no? I'm sort of on a group text message with like 10 different clients just looking for houses for them, actually. I hear a lot of our other agents say that's their guilty pleasure, but I'm like, I'm really out just for the people. It's very rare that I'm looking for myself.
Yeah. Well, we found a 4-unit as an example in the Bay Area, and you could purchase this 4-unit for 3.5% down, right? Occupy one of the units, rent out the other 3, and 3.5% down, folks, on a 4-unit. I mean, the purchase price was like 1.8 million, 1.7 million.
Yeah, and we found a couple others as well, like similar depending on your price point. But I mean, for the Bay Area, you're going to pay that much in rent, period. You may as well be a landlord,
absolutely,
and be able to live in it. For how long would you need to live in this? For
two
years?
and a half years, yeah.
Then you could move up and do this all over again, or get yourself something different or bigger and have an investment property while you're moving up. It's a great way to climb climb the ladder in real estate.
That is, and we'll definitely touch on that on some of the things that you're doing with multi-units, duplexes, 3 units, 4 units, ADUs, things like that. And but primarily, I want to get into kind of an article that is going to really touch on the news sector. Right, the job sector is starting to cool, according to the MBS Highway. Right. The August ADP employment report showed that there were 177,000 jobs created, which was a weaker number than 200,000 expected. However, July was revised even higher by 47,000 from 324,000 to 371,000. So most of the jobs came from the services sector, which added 154,000 jobs. The gains were pretty evenly spread out. Through trade, educational health services, and leisure hospitality. 30,000 jobs finally cooling off within this report, which added over 400,000 jobs in the previous 2 reports. Wow. Many believe this report has been overstated due to seasonal adjustments issues because of how far off this report has been from the Bureau of Labor. So I want to touch base on this, because this is kind of some important information. Before we get back, I want to ask you, where do you think rates are headed on September 19th during the Fed's Reserve meeting? We'll be back after this.
Okay.
Sweet Dreams Foundation is a 501c3 nonprofit whose mission is to glorify God by spreading peace, hope, and love to families with medically fragile babies and children. They offer dream bedrooms to children battling life-threatening illnesses, and their Ruse Baby program creates an atmosphere that will lift the spirit of the child, where they can laugh, play, and let their inner light shine. To learn more about the Sweet Dreams Foundation, visit sweet-dreams.org. When you work with Pro Mortgage and Realty, you're supporting the Sweet Dreams Foundation. Partner with Pro Mortgage and Realty today to buy or sell a home and help support the Sweet Dreams Foundation to help more children in our communities. Call or text Jessica Couch of Pro Mortgage and Realty today at 916-532-8916. That's 916-532-8916, or visit promortgagerealty.com. Work with the pros. Pro Mortgage and Realty. NMLS number 351319 and DRE number 017456667.
If you or a family member are in the process of buying a home, then you'll want to hear this. Pro Mortgage and Realty has streamlined the home buying process, providing you with mortgage pre-approval and a top-performing real estate agent all under one roof. And if you call or text within the next 10 minutes to 916-872-7177, that's 916-872-7177, they will cover your closing costs. Pro Mortgage and Realty makes it easy. They will negotiate the best deals and save you thousands by using one company. From down payment assistance programs, DSCR loans, FHA and VA loans, and more. They cover all aspects of mortgage and real estate, from finding you the right finance programs to finding you the right home. Work with a company that can be with you throughout the whole home buying process. Call 916-872-7177 or visit promortgagerealty.com for more information. Work with the pros. Pro Mortgage and Realty. NMLS number 315319 and DRE number 017456667.
Welcome back. We are your real estate prophets. Thank you for joining us on this wonderful Saturday. I'm here with Jessica Couch. Hi, Jessica.
You have such a great announcer voice, Ian. You are built for this.
Yes, thank you. Thank you. I'm blushing now. But we're talking about the economy, the interest rates, the rental market, the loan products, and how to play this game, right?
It is a game. Like, let's make this fun.
And so I asked a question, and where do you think interest rates are headed on September 19th during the Federal Reserve's meeting?
I didn't know it was happening on the 19th because I only watch Sesame Street and you watch the news for us. But I'm going to venture to say they are going up again. And these people that are standing on the sidelines waiting for them, sir, 5 times maybe so far. We're going to talk about this later. I've seen it happen once or 5 times maybe so far, where people say, oh, I'm waiting. I watch the news and I'm like, good for you. And they are still in a rental. I have several of those people in my circle that are still in a rental that told me 5-10 years ago, like, oh, we're waiting. Things are going to change and market's going to crash. So we're going to sit in the sidelines and then we're going to jump in at the right time. And that right time hasn't happened with what they had sitting from the sale.
I had people telling me that 2 years ago. right? And
My hands are up like, what?
but I can understand, based on what the economy has done over the past history and whatnot. But to answer this question, right? Just to give you ahead of this is according to let's see, we're looking at the MBS Highway. We're looking at the Federal Reserve rate hike odds ahead of the PCE inflation report. Markets were pricing in just a 12% odds of a quarter-point rate hike in September 19th through to the 20th.
Ooh.
The Federal Reserve meeting and 50% odds of hike by the following meeting in November 1st.
See?
Right? Before surprisingly drop in job openings report on Tuesday, odds for November 1st hike had topped out to 60%. So that just kind of gives you an idea.
Right.
And so they may or may not. It sounds like nothing on this quarter. They're going to see how everything plays out and may bump them up down in November. So we never know. But based on how all the reports are reading, what I read is that the majority of these unemployment reports are basically false.
Right.
And so they're understated overemployment numbers and so that's really kind of adjusting. They're adjusting like months later on the market. The market reacts, rates go up, and then it comes back down after they see how the economy's working. So I just want to add to this a little tidbit here is the markets took from their cue the tamer core of the overall PCE inflation. Readings at odds of November 1st hike dipped to 49%. In Jackson Hole, where they had their meeting and speech last week, Federal Chair Powell noted that the inflation has only come down modestly for the core non-housing services. He attributed sticky inflation at least partly to the labor-intensive nature of the service sector business. Given the size of the sector, some further progress here will be essential to restoring price stability, Powell said. Still, the Fed won't be quick to pull the trigger on additional rate hikes when core inflation is trending lower than labor market, which it seems to be cooling.
Right.
So,
no, I would agree. I think this is just a testimony to the fact that some of our friends that are watching the news and following along very closely to make a decision may be misinformed.
Yeah.
So and I think we're going to talk about that a little later. How many
Absolutely.
times the market has crashed. And, I've been there myself. I've been in the industry myself and really just gut checked what the next move was rather than listening to everybody around me say, no, it's going to keep going up, up, up. And I'm like, my gut says jump. I'm just going to get out. And I'm so glad I did have that gut instinct to get out when I did get out, and not wait for things to go up and up and up and have that risk factor of like, oh, maybe I can make a little more money. I'm sort of conservative in that realm. I'd rather just get out, make an okay amount of money and be able to reinvest it.
well, this just shows how strong the demand is and for housing in general. We have a shortage of housing. There's some serious issues going on. New construction softening that up a little bit.
True.
But there are things. There's quiet cutting. It says that large companies like Adidas, Adobe, IBM, and Salesforce are doing what's called quiet cutting their employees. This means the reassigning of the workers and pushing them to lower pay and a lower title so they can trim the costs and potentially cut jobs if they don't accept the laying off of workers. So they're moving people out. They're demoting them. They're pushing them to part-time, but that still keeps the unemployment numbers low, right? Which means that they're going to keep on continuing to raise rates to catch up with inflation. So that's why the rates have been going up, because they've been trying to push people to part-time. It's a lot of seasonal employment. So the numbers are not true that we're seeing.
Right.
And of course, right before the elections, they're trying to keep those numbers as glorious as possible, right? So just touching on that, one last thing is Glassdoor Employee Confidence Index. Now, you've got all these articles. You have all these, what Powell says, you have all these ADP reports.
Which, thank you for taking the time to alert me as to what all these people are saying.
Yes, you're welcome. And so, sorry, I won't bore everyone here, but Glassdoor is an employee confidence index. And so it's a website that the employees rate of their confidence in their company. They rate how good their company is, how good it is to work for. Is it a good spot because the income well. So that's kind of a little screen that you can view on if you're looking to jump on a company's Glassdoor. And so adding to the underlying weakness of the labor markets was the Glassdoor Employee Confidence Index, which measures business outlook from employees' perspective. This index dropped 47.6% in July, which is the lowest reading ever and down almost 6% from last year. Employees are becoming increasingly pessimistic about their employer's 6-month business outlook, and interestingly, retail, trade, and leisure hospitality, the two strong labor markets, had the lowest share of employees with positive feedback.
Interesting.
So you've got the Fed saying one thing and the people saying the other.
Right.
So they just need excuses to keep hiking the rates. So that is short-lived, folks. They can't continue to do so.
Right.
It's going to crush everybody. Right now we have record credit card debt. And I'm not here to scare everyone. I'm just telling you there is light at the end of the tunnel.
Right.
And it sounds like, based on my opinion and all the information that I read and we read, we're thinking that we're going to start seeing the rates reduce and drop within about 9 months. And it's going to be it's 6 to 9 months, I should say. But it really depends on what that next statement says in November. Right.
This will be interesting.
Yeah. So September, October, November, and depending on where November goes, it's going to probably segue to the next rate adjustment. So I think in 6 to 9 months, we're going to see maybe 1/4 to 0.5% drop, and then that's when people are going to start peeking in.
Yeah, I was going to say, what do you think that's going to do to our market again?
Well, let me tell you. So all the people that were waiting on the sidelines are starting to peek in, and what that's going to do is right now, how many buyers you think are making offers on the same home right now?
Oh, like 6.
6. Okay.
Yep.
Compared to last year, it was at 106 to that.
There
right?
were a lot more last year when rates were lower, but we've talked about this. That benefit is, yes, there are 6, although we've made 10 or 11 offers for a client. We just got into contract. Hallelujah.
Nice.
However, she knows the rates are high, but we're going to be able to refinance in 9 to 12 months.
Yep.
And she's going to be sitting pretty with equity
That's
that
right.
everyone else doesn't have because they're not yet in the market.
And that's a big play too, is how much equity you're going to gain over this.
Right.
And so, sure, the rates are way higher. They're extremely high compared to what other people have. But jumping into a market when it's about to get hotter, I tell
Right.
you, once rates drop another percent or two, good luck getting in contract.
Oh, I keep preaching the same thing. When rates do come down, prices are going to go up. Your payment is going to be the same. However, you're not going to have the ability that you have right now to lock in that equity position so that when prices do continue to go up as rates come down, you're in a better position if you've bought today rather than waiting until this time next year.
I want to talk to you about, you were just talking about that client that you said you get a lower interest rate. What are some things that we're doing and you see us doing that are making that easier? Because the affordability calculator, the average person goes on Zillow or one of those sites, right? And those are not accurate. They don't have the proper mortgage insurance. They don't have the proper
Fire
allocation.
insurance. Yeah. They're 30% off across the board,
Yep.
up, down, all around.
They're wrong.
Yeah.
So
wrong. That's an easier way.
If you want some real accuracy, reach out to Jessica or reach out to Ian here at 1380 The Answer.
Yeah.
My phone number is 916-872-7177, and Jessica's number is
916-532-8916. And I think you should really pride yourself in the fact that you get back to people.
Yeah.
When you text a mortgage lender, how often do I hear I never heard back? Ian responds at like 9 o'clock at night. He's like on it.
I don't want to, but I will. But no, it's important that you understand that we'll provide the right numbers.
Yes.
So getting back to what we were talking about is, what are we doing to make that payment as soft as possible?
Buy down, either a permanent buy down, which is something we were using more of last year, or a 2-1 buy down right now is proving to be the best way to get our clients in. And then the other offset has been bumping up the price enough that I can get the seller to pay the closing costs.
Right.
On our FHA, I need about 3%, and I'm getting sellers to do that.
Yeah.
We might have to write 10 offers, but you know what? I'm going to get you into contract. That is what we are known to do. We
That is
get
good.
you into contract.
Well, there's also the 1% buy down. So,
Right,
So
yeah.
2-1 buy down and a 1-1 buy down. What is the difference? A 2-1 buy down means if I can get you a rate for, let's say, 6.875 FHA right now, your first year, if you get a 2-1 buy down, we'll get the seller to pay for that,
Right.
or the buyer has to pay for it. It can be one or the other. It can't be a mix.
Okay.
So what happens is the seller could be also a portion of agent concession.
Mm-hmm.
And so what we do is say if you're at 6.875, we are going to lower that interest rate by 2%. You're going to be at 4.875 for the entire year. For the second year, you're going to be at 5.875 the entire year. The third year, you're back to square one. Our hopes and the market's hopes are, the bank's hopes, are that rates are going to be dropping, which we feel they will. At that point, you can refinance. You're getting the house at a good price. You're not dealing with the competition of the market once rates do drop, and your tax rate's going to be lower on the purchase price.
That's true. The taxes also.
And it's a phenomenal product. We'll run those numbers. In some cases, you're saving $600 to $800 a month.
Well, this is the option. You need to have all the options to make the best decision.
That's right. We'll be back after this, and I'll have some wonderful information coming up. You don't want to miss this with the Real Estate Profits.
If you or a family member are in the process of buying a home, then you'll want to hear this. Pro Mortgage and Realty has streamlined the home buying process, providing you with mortgage pre-approval and a top-performing real estate agent all under one roof. And if you call or text within the next 10 minutes to 916-872-7177, that's 916-872-7177, they will cover your closing costs. Pro Mortgage and Realty makes it easy. They will negotiate the best deals and save you thousands by using one company. From down payment assistance programs, DSCR loans, FHA and VA loans, and more. They cover all aspects of mortgage and real estate, from finding you the right finance programs to finding you the right home. Work with a company that can be with you throughout the whole home buying process. Call 916-872-7177 or visit ProMortgageRealty.com for more information. Work with the pros. Pro Mortgage and Realty. NMLS number 315319 and DRE number 017-45667.
When buying or selling your next home, work with an experienced team that knows the business, a local team that knows the market and has the skill set to take care of every single detail and get you top dollar if you're selling and help you negotiate the best deal if you're buying, all without spending a dollar out of your pocket. Work with Pro Mortgage and Realty. Hi, I'm Jessica Couch of Pro Mortgage and Realty. We cover those out-of-pocket expenses like your home inspection, appraisal, and help with closing costs. It's our commitment that we make to you with your next real estate transaction. We'll make it as easy as possible and stress-free. We're not all about business. At Pro Mortgage and Realty, we've developed deep roots in the community, and we've partnered with local nonprofits to give back. Come work with my team, a team that's got your back. Call or text me today, 916-532-8916. That's 916-532-8916, or visit ProMortgageRealty.com. Work with the pros. Pro Mortgage and Realty.
NMLS 351319, DRE 01745667.
Welcome back. Real Estate Profits here with Ian Boshoff and Jessica Couch. Hey,
Ew.
Jessica. We've been talking about the economy, interest rates, rental market, and loan products and how to play this game. It's
a very fun game.
It's a monopoly.
Yeah.
It's a monopoly with an economy that goes up and down.
Yeah, so true.
So we were just kind of going over the market, what the Fed was doing, and kind of the buy down is what we were talking about, because the Fed keeps on hiking up these rates. We anticipate them dropping in about 6 months. Now, what are we doing? We're doing the temporary buy down, the 2-1 buy down. It lowers your interest rate by 2% your first year, 1% the second year. You're back to your square one on your third. But what happens when rates come down and it's in the middle of the buy down process? So about a year has passed, and for some crazy reason, they've decided to bless us with the grace of glitter fun and say, hey, rates are 1% lower and you want to refinance. Well, you can do that. You will get a refund of whatever's left over in your escrow account from that temporary buy down that was paid by the seller or paid by you.
Right.
It's applied to the principal balance that's owed. So when you go to pay off the mortgage, when you refinance, it'll be refunded back to the balance. So Jessica, I'd like to talk about the rental market.
Yes.
And it's been hot.
It
for a
has
long
been
time.
really hot, and we're seeing increases continue to go up and up and up. But
the rental market, according to Hot Pads, shows that there are currently 106 rentals in Roseville, 34 rentals in Rockland, and 42 rentals in Folsom. So the 34 and the 42, they seem normal. And this is all in California, in case those are
Right.
listening outside the area. But 106 rentals, that's over double than, almost 3 times the amount of those two markets. What do you think that is and why?
I think investors are gobbling up a lot of the properties because they knew it was a good time to jump in. And now we have more rentals than we've seen in quite a while, which is creating some more inventory.
Yeah.
And we haven't seen this amount of inventory. Rentals have been like, 100 applicants per property. And now we're seeing, well, at least the ones that we're helping with right now, we're seeing about 10 applicants per property, not all of which are well qualified. So definitely a changing market that we're walking into with rentals you were able to just name your price, and now things are back on the reasonable side on rental.
Yeah. And also, you've got schools back in session.
Yeah.
That has a lot of impact on people wanting to move.
True.
That has a lot of impact on, do I want to change school districts? And it also, Roseville, out of these 3 markets, the Rockland and the Folsom, you're seeing a ton of building, right?
Yes.
And so
true.
So a lot of these new investors had bought these properties and in the market of either, hey, we're going to move into them in a year, or they're just swiping them up because they know the long-term period of
Right.
Roseville.
Yeah.
Roseville is a top hot market. And so the further you go out is going to push out for new construction, and those houses are sitting as they sit. Sometimes those lots aren't as desirable, right?
Very true.
Sometimes the locations are pushed out kind of far. People don't want to live so far when they're renting.
Right.
So we have seen some price drops on rentals, and I think that it's going to change. Once the housing market dips and once rates drop, I think we're going to see those rentals turn into sales.
Oh, I guarantee it.
Yeah.
Yep. I think a whole bunch of those 106 are going to be sales here in the very near future.
Absolutely. I wonder if BlackRock picked up any of those properties.
Oh, I'm going to put a call in. Go find out about that.
So we're looking at the rental market. So if you're thinking about buying an investment property, do you buy it? Well, the answer is always long term. You're going to have a yes with that answer. You're always going to profit. And if it's your primary residence, you're always going to profit. No matter what. If you look at the
Agree.
history over the course of 10 to 20 years, the house that you bought 20 years ago is going to be worth a lot more 20 years later.
100%.
So you have to understand what your game plan is. You got to know your reserves. So if you're currently living in a home and you want to buy, but you don't think it's the right time, or you don't think you have enough cash down, we can help structure the loan that's best. We talk to hundreds of people each month regarding their financial plan, what they'd like to do. We don't just say, yeah, we'll get you pre-approved, get you into a house. I want to know what your plan is.
Yeah.
What's your 5-year plan? What's your 10-year plan? Not just with this property, but with other properties. If you're buying one house, you probably want to buy another.
Right.
We do flips. We deal with people that do, they live into it and they use it as a ladder property. And we've got people that own 30, 40 properties under our client list. So, we see every single type of investor. Jessica, I know you've worked with tons of different type of investors. What have you seen with their portfolios grow over the past 10 years? How are they financially now?
Oh, so much. But I've seen it happen where people that aren't even exceptionally bright or talented or making a ton of money get into one property, get 3 roommates to rent out the rooms, pay the mortgage, and on to the next.
Yeah.
And I'm seeing this great thing happen right now where we have young professionals that are taking advantage of this very model. They're buying a reasonable home that they can afford, and they're renting out several of the rooms, covering their mortgage, and their plan is to do it again within 5 years. So
Absolutely.
Exciting time to be part of something like this, especially working with such young professionals that really want to come up in this market.
That's good because, I think I was looking at an article 3 years ago or 4 years ago, there was average house of the U.S. is about 230,000, and now that same house is worth double. Right?
Yes.
Interest rate 3.25%. Now interest rate 7%.
Yep.
Right? Payment, in order to qualify for the same house,
Right.
less than 5 years later, you need to be making $130,000 more dollars a year to be able to qualify for the same house. The payment is over $2,000 more. So if you don't buy now, where do you think it's going to be in 10 years?
Yeah.
Yeah, we do down payment assistance. I can get into some loan products here. We can do down payment assistance means 0 down payment, folks. We do 0 down. If you don't think you can qualify or if you think you make too much money, we've got programs that will go down to a 580 FICO score. If you think your credit is awful, you need to speak with us. We can get you into the position to buy within the next 6 months, no matter what. Work with Jessica, work with Ian. You can text to 916-872-7177 or go on to promortgagerealty.com. If you just want to look at houses and you don't know what to do, or you're a young aspiring female, or if you got issues and you just got credit is beat up, you should call Jessica. She can help you get to rags to riches in no time. And Jessica, you want to give them your number?
916-532-8916. I'd be happy to help. We've got someone we helped recently that needed some kind of help, and you were able to do a few free tricks, and we've spent some time in front of the computer and on hold with Experian, and we have got her done.
Yeah.
So don't wait. Don't not enact a plan because you don't feel like you're ready. It might take 6 months, but call now so we can get that plan in action.
That's promortgagerealty.com. If you have questions about that or during the show, 916-872-7177. We want to get over to some tools that we can provide to you if you do reach out to us. The bid over asking price tool, we have a tool that will tell you how much you should bid over the property and how long it'll take to recoup if you bid over asking price. Is that a common thread that you're seeing?
Yes. And I think it's a great marketing tool that you have available to our clients and to our team, that we know what that equity position is going to be in, say, 12 months. So we know if offering over is going to be worthy. And in most cases, I have to offer over in order to get the buy down paid for or closing costs or both.
Yeah. And the bid over asking is important to know because you don't want to pay for that in this market, but there are multiple offers. And sometimes you need a bid over asking to get that credit for that temporary buy down.
Right.
If you don't get that credit for the temporary buy down and you don't get an real estate agent that advocates for seller credits, you're going to be paying not only the down payment, but you're going to be paying $10,000 to $12,000 in closing costs that have nothing to do with the lender. You're going to be paying for the temporary buy down, which is a temporary buy down to the bank. That in itself is about 2.125%. So your 3.5% down or 3% down or 1% down just increased by 3%.
And I'd way rather see you finance that amount, especially when we have a buy down. Money's still fairly cheap to borrow, so I'd rather stretch that over those 30 years and get the seller to front the cash.
Absolutely. Well, we also do the appreciation calculator. If you buy this house today, what is it going to be worth in 5 years?
Right.
It takes the analytics of where the property zip code is, the actual address, the trend that it had over the past 10 years, and the trend to project going forward with all the analysts. So that's a good tool to have. The debt consolidation tool. So as you know, there's been $2 trillion worth of debt acquired with credit cards over the past year, and I can't believe that number it just keeps building. So if you're interested in buying a home when, say, rates drop, or you've got that 3.25 or 2.875 30-year fixed, but you've got $90,000 worth of credit card debt that's eating you up. Your payment is almost $3,000 a month in credit cards. And I have seen people rack up the boats, the credit cards, and you can't even believe their situation. Their FICO score's down, to 580. And this is not just one person. This is a lot of people, most of them. So what we do is,
what's the solution for that?
well,
That's scary. What's the solution?
We can do a HELOC, and that is a situation where their interest rates are a little bit higher, and a lot more higher, actually. And that can pay off all your credit card debt and then get you in a position to be able to get a higher FICO score, to get a better loan that you can purchase once you're ready. The other option is refinancing the whole thing, because it really depends. If you're planning on selling this home in a year and a half, and you still love your 3.25, but you've got all that credit card debt that's at 20 to 30%.
Right.
You're getting late fees, you name it, you're really effectively at 30%. So that's just eating you up. You're in that vicious hamster wheel.
Right.
So if your goal is to sell this house, why don't we just do a cash out refinance, pay off all your debt, have one payment. I can give you a tool and show you over the internet and the phone, and just do a walkthrough on a Google Meet, and I could show you how much less you'll be paying. So,
this goes back to strategy.
Yeah.
Like, it's really important to have a team for free. You're not spending any money on this, by the way.
Okay. Yeah, I think so. It's free. That's one thing.
Free. You just call. Text.
You never pay me any money. The bank pays me. We work with about 18 wholesale banks, primarily 3 solid ones that we like to wholesale to. Our comp plans are low. There's no one taking money off the top at our brokerage, and you're going to get probably one of the best and lowest deals of interest rates and fees out of any other institution if you work with us.
Truth.
So we're coming up on a break. I'd like to ask, how many major housing crashes has there been in the U.S.?
Oh, that's a good question.
All right. We'll be back after this.
When buying or selling your next home, work with an experienced team that knows the business, a local team that knows the market, and has the skill set to take care of every single detail and get you top dollar if you're selling and help you negotiate the best deal if you're buying, all without spending a dollar out of your pocket. Work with Pro Mortgage Realty. Hi, I'm Jessica Couch of Pro Mortgage Realty. We cover those out-of-pocket expenses like your home inspection, appraisal, and help with closing costs. It's our commitment that we make to you with your next real estate transaction. We'll make it as easy as possible and stress-free. We're not all about business. At Pro Mortgage Realty, we've developed deep roots in the community, and we've partnered with local nonprofits to give back. Come work with my team, a team that's got your back. Call or text me today, 916-532-8916. That's 916-532-8916, or visit promortgagerealty.com. Work with the pros. Pro Mortgage and Realty.
NMLS 351319, DRE 01745667.
If you or a family member are in the process of buying a home, then you'll want to hear this. Pro Mortgage and Realty has streamlined the home buying process, providing you with mortgage pre-approval and a top-performing real estate agent all under one roof. And if you call or text within the next 10 minutes to 916-872-7177, that's 916-872-7177, they will cover your closing costs. Pro Mortgage and Realty makes it easy. They will negotiate the best deals and save you thousands by using one company. From down payment assistance programs, DSCR loans, FHA and VA loans, and more. They cover all aspects of mortgage and real estate, from finding you the right finance programs to finding you the right home. Work with a company that can be with you throughout the whole home buying process. Call 916-872-7177 or visit promortgagerealty.com for more information. Work with the pros. Pro Mortgage and Realty. NMLS number 315319 and DRE number 017456667.
Welcome back. We are the Real Estate Profits with Purpose. I'm your host, Ian Boshoff, and here with Jessica Couch.
Good evening.
How you doing?
I'm excited to find the answer to the question you asked just before the break.
Well, the question I asked before the break was, how many major housing crashes in the U.S. has there ever been?
I'm glad you do all this research for me because I do not actually know the answer to that question.
You want to take a guess?
Gosh, ever? I'm going to say, I was going to guess at least 10.
10. Well, I think you're right when it comes to 10 because those are the minor housing crashes, I think. But can you believe since 1837?
Wow.
Okay, I'm going back.
Yeah.
Going way back, right? I'm going back 186 years to be exact. Since 1837, there has been 5 major housing crashes. Okay? Everyone's waiting.
Mm-hmm.
Keep on waiting.
Yeah.
The Panic of 1837, the 1873 stock market crisis, the 1929 Wall Street crash, the Great Depression of the 40s and 50s, and the housing bubble of 2008. So, of course, you could squeeze in the 80s, with it,
sure.
with the interest rates and whatnot. But the major housing crashes are those. So the bubble, everyone remembers that whole Lehman Brothers. Why is Lehman Brothers always attached to it? They're poor guys. I swear, they were the only ones that were buying the loans, and the only problem is they didn't audit what they received. So all these mortgages that were subprime, that were quote unquote rated A-rated or AAA rated, were actually B, C, and D paper, which means that they had low credit, high risk. And but they were bundled in with the AAA rated credit ratings. And so the audits that were saying, hey, yeah, buy this bundle, it's AAA rated. They were buying all that paper thinking, oh, yeah, it's going to be great. But those are the first deals that defaulted.
So they got duped too.
They did
duped. We kind of all got duped, right?
We all did.
People were buying houses that were, truck drivers that were qualified to buy something in the 200s that were buying 5 properties in the 500s.
Yep.
Because these programs were available that everyone got duped.
Oh my gosh! So there was 100% financing, but the biggest thing is you didn't have to prove your income.
Right.
You had a pulse and DNA, and you're good to go. A name, a phone number, and a social security number, and you're good. You just state your income. Well, we don't have that, but we have a bank statement program. Now, I'll just go into some products that are available in case people don't know. There's DSCR's kind of a big hot trend that you hear. DSCR covers investment property. The trick is you have to own a primary, and you have to have the property is driven by the income it generates. So you have to prove the income that's generated off the property.
Like with a current lease.
Lease. And usually a Schedule E of real estate could be one of them. But when it comes down to it, there's really no income associated to the situation.
Yeah, listen up, guys. If you're looking to get a multi-fam, that is the way to jump into the market.
Yep. And
these are already rented and ready to go.
You could probably pull off a multifamily with about 3, let's see here, I'd say about 15% down to 10% down, depending on the cash flow of the property.
But not needing your own income to qualify for that triplex or that quad, right? You're using your future rental income that we already can account for because they're getting it currently right now. And chances are, if we run Rentometer, which, we've got a great account for that, we can figure out what you could bump rent to. And that, because I see a lot of these where they haven't bumped rent in 5 years. They haven't done any repairs and they haven't bumped rent. So that's a great option for someone who wants to get into the rental market and be a landlord.
The DSCR. So if you have questions on that, feel free to text to 916-872-7177. We can go over that. There is a 6-month reserve requirement per property owned, so it gets a little tricky.
Okay.
We can go over those details. The next one that is new is it's basically a no ratio loan, and it's for owner occupied, which is it goes up to 80%, up to $2 million.
Wow.
20% down on a purchase. If you have a 720 FICO, you can get 20% down, no ratio, meaning there's no income proving.
Wow.
Right? Of course, rates are going to be slightly higher, but you're able to get into something on owner-occupied. There's a big difference between owner-occupied and non-owner-occupied and proving income because there's a QM rule. The CFPB put out a rule for the non-QMs. That's a non-qualified mortgage rule.
Right.
So you have to prove your income on owner-occupied. There is a no ratio, and so this no ratio product kind of had sidesteps some of the guidelines. I'm not sure how they do it, but typically you need reserves, and they base it off of asset verification. So you need a heavy amount of reserves, 18 months to 12 months, depending on what you're getting. So think about that, right? If you're bringing on somebody as a borrower, you want to buy a house, both of you go in on the home. If they got heavy reserves, you don't have to prove your income.
Right.
Call it a day.
Partner up, people. That is a great idea.
Yes. And then I'd also like to touch on reverse mortgages, and reverse mortgages are a real niche.
How old do you have to be for the reverse mortgage now?
It's 59 and a half.
And what if your wife is younger? Is that okay?
That is okay.
Okay.
Yeah.
Okay.
Is it? Wait a minute. No, yeah, it's okay.
I think I don't do those all the time, but I think the last one that I had been part of, the wife was younger.
Yeah.
Husband was a little bit older and got himself a younger wife, and we were able to get him into a reverse mortgage. I was able to sell their home, use part of that equity to go into a reverse mortgage because they didn't want to have a payment.
Yeah, and that's the key thing, no payment. So there's been situations where people go, oh, those are scams. But the problem is that when you're older and you're in a position where your property taxes and your mortgage it's not quite paid off, it's close, but you don't want your family struggling. You don't want your parents struggling to make the payment, to make ends meet. They're just living off Social Security and maybe a small pension. So don't get greedy. If this is going to help your mom or dad out or grandparents out, then let us talk to you about it. You have to go through multiple training programs just to understand the product, because they don't want any sort of usury laws to go through, and they want to make sure everyone knows what they're getting into. It is a really, really, really good product for certain situations.
I've recommended it to one set of parents already.
Yeah.
We don't need anything. We're good. You don't need to have a payment. This is a great way to offset that. You can go do more traveling and all of the things that you want to do within the time that you now have available.
Enjoy it.
Yes.
Enjoy the equity. Some kids are well off, and their parents are struggling. So this is a way for them to never have a payment.
Yeah,
and
it's a great option.
And enjoy it. So
great option.
That is a great option. So we have the bank statement program, we have the DSCR program, we have the no ratio program, and then of course you have your down payment assistance and things like that. Those are stuff we do every day. But I want to talk about a couple things, listings. Do you have any listings on the market right now?
We do. We have some land available. The seller's even willing to finance that. 10 acres in Georgetown. Beautiful, beautiful place. Don't try to go there without a 4x4. Just go ahead and call me on that one. And then I have a great multi-generational property, which I'm seeing so much more of, where families are combining and staying together longer because of the sort of weird market we're in right now. And I'm seeing a lot more of that, where parents want to be really close to their kids and their grandkids and have a little more help provided. So if you're somebody looking for a multi-generational property with an amazing pool and a huge lot, we've got that available for just over $3 million.
Awesome. Well, I think that sounds great. Jessica's got a Tesla with a John Deere sticker, everyone. She is.
I tow stuff a lot. We have to stage some houses. I like to help people move pretty often. I have a trailer on that thing all the time.
Minutes. Okay, so I wanted to go over a listing that we have. It's 4090 Club View in Whitney Oaks, and for some reason we don't have an offer. I have no idea why. This
would be such an excellent opportunity for somebody. I have a whole lot of ideas on who this would be good for, but this would be a great care home. This would be great for somebody. This would be a great Golden Girls home for someone that wants to be able to golf and hang out in this beautiful community, and you're close to so many amenities.
And a clubhouse. You have a clubhouse. You have a restaurant. You have a bar. You can drink your Pinot Grigio or your rosé or whatever it is you like to drink, or your water.
Travel in your golf cart.
All day.
And how many bedrooms is this?
It's 7.
7 bedrooms.
7 bedrooms.
If you go to Rockland, you get 7 bedrooms at what's their price point?
It's 1,695.
It's a steal, guys. A steal. This would make a great Golden Girls retirement home. I think that's what we should be pushing.
Yeah, I think it's got 5 bedrooms downstairs, 3 bathrooms, and it's got 2 bedrooms, 2 baths upstairs. It's really your entry level is upstairs. So you got a primary and a side business. So I wanted it, or a side business.
No, we're going to make this a business. It's called the Golden Girls. You can come see me for your plan.
Welcome to the Golden Girls Retreat.
Yes. Oh, how fun.
I love it. If you have questions, if you want to talk about any of these listings, reach out to Jessica. Jessica, you want to give your number?
916-532-8916. Oh, we also have something else coming up. If you're looking for a home that you could Airbnb, a home that's great for retreats, you can call me direct. We're offering seller financing on a great home far, far away, a great retreat home. So if you want to get in on something like that, seller financing, much to my surprise, we still have deals. Weird things that come up that we're able to offer through our team of people. Yeah. So if you're looking for something, you're like, I want to buy, I don't have down payment, I'm not sure how to get in, chances are we have an option for you.
The seller financing is very hard to get. So.
It is. But we've got something like that available right now. So
that's awesome.
916-532-8916. You can text if you want more info.
Okay, so we talked about the big old 5 crashes in the United States of America, right?
Yes.
The 5. And we're coming up on our end of our show, but there's one last thing that I'd like to touch bases with is if you are in the market to buy a house and you don't even know if you qualify and you think your credit is beat up and you have nowhere to turn, you're too embarrassed to call anybody, you're worried about what it's going to cost, you're worried if you don't qualify, there's 2 things that you need. You need a job. That's number 1. And you need to face those issues. You need to pull up creditkarma.com. You need to put up Experian.com. You need to look at where you're at. And if you don't want to do it, I'll do it for you. Feel free to log on to promortgagerealty.com. You can text or call me at 916-872-7177. If you're looking to buy a house, you need to hit up Jessica Couch.
916-532-8916. Text me anytime.
And thank you for listening to Real Estate Profits with Purpose.